Hi, my name's Brendan Kelly.
As part of the Results Mentoring Program, we like to celebrate the success of our members and take the opportunity to use their success to help support, encourage and educate members of the program on how they may be able to achieve similar results. So at the get-together, we invite members to share their success through sharing their information about their real deal.
In this video, you're going to see Results mentor Simon Buckingham speaking to Results graduate James Manner about how he was able to leave his job and become a full-time property investor. So sit back, relax and enjoy as James shares with you how he was able to quit the rat race.
We've called this one Escape the Rat Race because this is really what it's about. It's about getting out of your job. Now, brief introduction to James, or at least some of the most recent events in James's life. Last year he got married, and his lovely wife has also joined us today. And I got this wonderful email from James in October last year saying, "Hey guys, I just wanted to let you know I've done it, I've quit." And we thought that was awesome, and it's been a really amazing journey over the last 5 years, and being James's coach over that period of time, to witness the change and how he's grown to get to this point to actually be able to leave his job and to do it with confidence. So, James, in terms of where you started out, what got you into property investing in the first place? Why did you start?
Oh, I think it was to basically get out of the rat race. Didn't really enjoy my job. It was paying really well, but hated going to work every day and just looking for something different and, to get back, time in my life rather than having to be a slave to a job. So.
Fantastic. Who can identify with that? Yeah. And has it been an easy journey?
No, certainly not in the early years with not a lot of equity and still working full time and putting the hard yards, but it's certainly getting easier, I think, with time and with education, so yeah.
Fantastic. Well, let's take a look at a little bit of what James has been doing. Really, he's achieved financial independence, not having to go back to a job in just 4 deals over just 5 years. And these were the deals. You started simple, just a reno subdivide kind of a deal, with building a new one on the back, and then moved into some multi-unit ones, 1 into 3 first, and then last year a couple of 1 into 4s. And today we're going to go through one of the more recent deals, the Ascot Park one. And I'll get James to, in the first instance, just to tell us a little bit about the site and what's this. How did you find it?
It's a 1,012 square metre block in Ascot Park, which is about 15 minutes from the city. Kind of nice mid-range suburb, but in a reasonably good location. Ended up picking up the site, got a phone call from an agent saying I've heard about this site where someone's walked away from a contract, and so it was off market, and got it for 420, which was a bargain. The same blocks are now selling for 560, and went on with it.
Excellent. So the key there to getting that price was being in the market, relationship with the real estate agent, and being prepared to move quickly.
Yeah, being ready to buy. Yeah, certainly don't. I don't waste agents' time. I let them know when we're ready, and then they know that they'll get contracts quickly out of us. So.
Fantastic. Yeah. That's what it looks like. Not all that pretty.
Solid. Yeah.
That's the backyard. So what were your first thoughts about what you would do with this site?
We thought we'd keep the house and put 2 on the back. The zoning supported really a density of 3 by looking at the numbers. The house was fairly far forward. You can see on the right-hand side the existing residence there. And we did some plans up to do 2 on the back. And we actually submitted these and spent some money on plans and got them partway through the council planning process.
Partway through though, so you changed your mind?
Yeah, sort of did a bit more research and got an inkling that really 4 was a potential with the density. There was an emerging trend for more leniency on density going to 2-bedroom homes as opposed to 3-bedroom homes, which has been a strategy I've used quite a lot now. And we thought, we did the numbers, we thought, well, yeah, we've sunk $4,000, but we'll park that, take the hit and have a crack at doing 4. And we were successful, and we've set a new precedence on that very street, and that's why the blocks are now going for 560, not 420. So. Cool.
So you were okay with the numbers on just the 3-lot subdivision?
Yeah, still to be.
But you were more okay if you could get 4?
Yeah, definitely. Yeah, definitely.
Right. So the concept of highest and best use. How much can I get on the site?
Squeeze as many as you can.
Excellent. So that was the new plan. You can see there the four units that were proposed.
Yeah.
So here we can't keep the house anymore. It has to go. And this is the thing when you're developing. And you have to lose a house. If it was a habitable house to begin with, you are going to lose some value from the land. So you've got to catch that up with the density you can put back. Often it's great if you can keep it because you preserve some of the value in that house and you get some very cheap land as a result. But here it made sense on the numbers to bowl it over. There it goes. Going, on, and under construction. Those are the houses coming up. So you're into this project. This is what the finished product looks like. So we've got, each of these was 2 bedrooms?
Yeah, 4 2-bedroom, about 115 square metres each, so they were large-ish 2-bedders.
Yep.
Yep.
So we're talking about an affordable product here. We don't have to go over the top.
No.
Keep it simple, but keep it nice.
Yeah, but dress it up in a few places. So, a few little timber features here and there, some contrasting brick, no render, but, a bit of money spent on the kitchens and bathrooms.
Yeah. Now, who can see the stone bench tops in the kitchen? What if I said they weren't stone? They're not stone bench tops.
No, that's laminate diamond gloss with ABS edging. So it's a little bit more than laminate, but a lot less than stone. And use that in all my projects. Yeah, it gives a good finish. So, yeah.
So you don't necessarily have to go over the top to get that kind of shiny finish.
But glossy laminate doors, a few little upgrades, aluminium kickers around the bottom, and yeah, basic appliances. But careful with your selections. You don't have to spend a lot these days. The base stuff is good enough as long as you don't go, Bunnings, bargain basement.
Correct, but you're aware of your target.
Yeah.
You're aware of your target market here as well, and what their expectations are going to be, and they're not expecting super luxury.
No, keep the price down.
Waist high tiles in the bathrooms.
Yeah.
Those neutral colours, easy on the eye throughout. No feature walls or over the top expense here.
Yeah.
And low maintenance.
Yeah.
For the type of buyer here is not expecting a big backyard, it's just low maintenance courtyard.
That is one of the big ones.
Yep.
Yeah.
So let's take a quick look at the numbers. So we bought it, as you said, for the low 4s, and we've got holding costs, obviously a bit of delay there and change of plans. They're planning your construction and finishing for compact 2-bedroom units. End up selling for over 1.5 million. We've got to strip out the selling costs and the GST. The profit on this was $334,000. Now, you did this in joint venture?
Yep, so this was none of my money whatsoever in the deal. I was with my old boss and he provided all the lending, all the capital. I ran the whole project and we're both extremely happy. So
fantastic.
Yeah.
Not a bad outcome, yeah? Some critical success factors. If you guys want to quit your jobs, there are certain things that I think you've gone through over the last 5 years, James, to get to this point that have become habits and skills that you've developed, one of which is this.
Yeah.
So why is this important to you?
Oh, look, you've got to know you've got enough money to finish the deal. I think a lot of people go into deals, not really knowing exactly how much cash they need and at what times. So I started working with Simon pretty much from my second deal, building a cash flow forecast, and it went through a lot of evolutions, and it's a bit of a monster now, but it's become, I guess, fairly refined. And I know all my liabilities, income tax, GST, how much capital I need, all my loan funding, plots into it.
Yep.
And we can forecast over the next 5 years all the peaks and troughs, and obviously the goal is to get it growing, but the goal is to leverage whatever capital you've got as well. So
absolutely.
Yeah.
So you've got to be in control, not just of the numbers in the deal, but the numbers in your life.
Yeah.
As well. See what's going to be coming in the next 12 months, what's going out, what's coming in.
All our holidays go in there, anything we're going to personal spending, big purchases, things like that. So,
correct.
Yeah.
The pipeline, this is like any other business, right? You've got to have a pipeline of opportunities coming in to find the few that will actually make sense. And you've done this, James. I mean, in order to find your first deal, how many feasibility studies would you have written?
Oh, at least 100, I'd say. Yeah.
Yep. So, if you're sitting there going, I've done a couple of feasibilities and it's just, I can't find a good deal, you need to do a few more. As James has set up on this slide, he did over 300 feasibilities in order to find the 4 deals that got into financial freedom. Was it worth the effort?
Yep.
Yeah, was it worth the learning, the mistakes, the figuring it out, going back and trying again? Of course it is. It's all worth it. Obviously, you've become a bit of an area expert in the areas that you do operate in. Who are some of the people you talk to?
Oh, local real estate agents, other people through the networking, fellow developers in the area, things like that.
Yep, and you do a lot of desk research, so you look at comparable sales values, you use things like Nearmap to see the layout of the site, up your data for sales, that kind of stuff.
Talk to agents and find out prices before the data's there as well.
Yeah. So again, it's just becoming a bit of a systemic approach, isn't it?
Yeah.
And you started small. So he didn't leap straight to the 4-unit deal. He started with this simple subdivide and build one on the back. But he's learnt to do more with less. So by going through this process, building his confidence on the smaller deals, he's now started to attract other people's money to help him take things up a level. And that's something we've found, the results team have found in our own investing, that over time we've brought in JV partners or money partners to help us accelerate to take on deals where we're committed elsewhere. This has been one of the key things that allowed you to get out of your job faster.
Yeah, so I've got 3 JV partners now, 2 of which are my old bosses, so yeah.
That's all right.
Yeah.
Leave work, go back. They're time-poor, high-income individuals.
Yeah.
Perfect for JV partners.
And good trust relationship, so yeah.
Sure, and you understand their ways of working to some degree as well.
Yeah, and they know me pretty well.
So if you wanted to share a couple of things with these guys to take away from today, what are 2 big things that have made a big difference for you, do you think?
Oh, look, obviously the results program, I wouldn't have been able to do this without the support. And just, knuckle down, it is hard in the early days. I did switch off the TV and spend all my evenings reading and learning, but it does get easier with time, and now I've got the luxury of having that time to enjoy, but it's taken a few years, but it's been worth it. So.
Fantastic. Thanks for sharing that. We do have a small token just to recognise the fact that you're now financially free. Well done.
Thanks very much.
And thanks so much for sharing the deal. I hope you guys have taken something away from that.
No, thanks,
Cheers, James.